NDTV Profit. My name is Alex Mathew and you're watching All You Need to Know. Over the course of the next half an hour, we'll tell you everything that you need to know to start the day on the right note. Let's start with the headlines. It's the advent of a new era. Prime Minister Narendra Modi says that the Ram Mandir will bring prosperity and development. Jeffries says that Ayodhya will surpass Mecca as well as the Vatican as the global spiritual tourism hotspot. Sony walks out. Zee merger deal collapses. Brokerages downgrade significantly. The stock is likely to open gap down. Bulls are back on Wall Street with the S&P 500 and the Dow notching second straight record closes. Asian markets trade mixed. The Nikkei 225 hits a 33-year high as investors expect the Bank of Japan to keep its policy rate unchanged. ICICI Bank's third quarter profit crosses 10,000 crore rupees for the first time ever, beats estimates with the ADR up as much as 2.5%. Now, the nation cheered the consecration of the Ram Mandir in Ayodhya and beyond the religious and cultural significance of that landmark moment, which is undeniable, the revival of Ayodhya is set to significantly bolster tourism in the state and, in fact, in India. Jeffries anticipates that the footfalls will surpass Mecca as well as the Vatican City combined, with over 50 million tourists expected per year. The Vatican and Mecca, for context, get about 30 million footfalls combined. In international news, the Dow and the S&P 500 notch a record close for a second straight day. The Nikkei 225 is trading near 33-year peak as the Bank of Japan, in just a short while from now, is expected to announce that it is keeping its policy rate unchanged. The outcome of that meeting is at 8 a.m. this morning. Oil is edged higher with tensions in West Asia offsetting concerns that global supplies remain ample. The US and UK launched fresh airstrikes against 8 Houthi targets yesterday night. And that was the latest action to stop the group from harassing commercial shipping in the Red Sea region. As of this morning, you have NYMEX in the US that's trading very close to that $75 per barrel mark. And you have Brent crude, which is about $80 to the barrel. Let's turn to the Indian equity markets, and we had some trade on Saturday. Of course, we had a normal trading session and we had a holiday yesterday. There was low volume though on Saturday, so there's a lot to account for in trade today. What are the latest cues in the F&O space? Agam is standing by to tell you just that. Morning, Agam. What can you tell us today? Nifty expiry, of course, to take into account.
Yes, absolutely, Alex. Well, we're watching out for the action from the institutionals, especially given FPI and DIs will now return to markets, and that could perhaps magnify a lot of the trade that we saw last Saturday. While we did see a 0.25% cut on the underlying, as far as the Nifty is concerned, a 2% increase in open interest. And as far as the Bank Nifty is concerned, that's where we did see about a 0.8% up move for the Bank Nifty and an unwinding of nearly 9.5%. So a tad bit of short covering has already taken place, but it's not enough, and not enough to be named as a short covering because we still haven't moved above the mark of since we've seen consolidation of the previous few sessions. That said, if we do see a reaction on Kotak Mahindra Bank, further reaction on Kotak Mahindra Bank, as well as ICICI Bank, perhaps positively, then we may very well see that trigger as far as the Bank Nifty is concerned. And hence, the Fin Nifty may also see a sharp up move. And let's not forget, as Alex has already mentioned, Fin Nifty also seeing an options expiry. Speaking of the options market, as far as the Nifty goes, well, we did see a lot of more writing around. 21,700, 21,800 calls, but naturally because it was a day where the benchmark, the specific benchmark came off. But as far as your open interest distribution, the kind of range that it is indicating at the moment, at least based on max OI, which we are seeing in 21,500 put and the 22,000 call, well, that's a 500-point range within which we're expecting the Nifty to move within. And Nifty Fin, of course, will also be in focus because of the weekly options expiry. At the moment, while we are seeing a lot of writing, around 20,600, 20,700 calls, in fact, 20,800 is the one with the max OI, should we see strength in the markets? You never know. We may, in fact, start seeing a lot of activity around puts being written. Now, let's move on and talk about stocks. And, well, we did have Balkrishna Industries, which did see longs build up. But GNFC, JK Cement, Gujarat Gas and Sun TV, on the other hand, looking at shorts building up there. And we didn't have too much movement as far as the respective underlyings are concerned. But when it comes to those stocks, we saw unwinding in open interest. We saw longs unwinding in Oracle Financial Services, perhaps on expected lines, and BHEL. That one was also expected because both these stocks have run up significantly of late. And short covering for RBL Bank Emphasis and L&T Technologies. But Alex, all eyes will be on Kotak Mahindra Bank and ICICI Bank, which could perhaps, move the needle for the Bank Nifty today.
Absolutely. Thanks so much, Agam, for bringing us those details. Onto a stock that is likely to see significant selling pressure in trade today, and that's Zee Entertainment. That is the top corporate story that we're tracking. In fact, on a Saturday, you had the stock decline about 1.5% as well, and there was a drop on Friday as well. This is because the official outcome has come in from the Sony board meeting that took place on Friday. And that is that Sony has called off its merger with Zee Entertainment and sent a termination letter to the company. To put this in context and to talk about why this has come to this point, I'm joined by Sajith Mangat. Sajith, what can you tell us about why we've reached this point and what the likely path ahead is going to be?
The Sony Zee talks were on the brink of failure because over last couple of months. But both the parties were trying to salvage some kind of deal going into the deadline, which was Jan 20th, which is a 30-day grace period from the 2-year deadline, which was December 22nd. It seems that there were a lot of conditions which were not met. One among them was who's going to be the principal, but Zee has categorically stated that Puneet Goenka was willing to step down and and take up a board seat till the entire investigation against him is over. But more than that, what we understand is that there were other financial conditions that needed to be completed before the merger could go through. It was more of coming from the financial and balance sheet point of view. Some of the companies which which Zee had incorporated in Russia needed to be wound down. That didn't happen because Sony is a US based company and it can't do any business with any company which has a link with Moscow. There was another company where they have infused nearly 520 crores. They wanted to have that off company and not be part of the thing. And from both the ends, there were a couple of issues which remained unresolved by the time the timeline ended, and that's the reason why Sony sent out a termination notice along with notice seeking damages to the tune of breakaway fees of nearly $90 million to Zee, and that will be done through an arbitration process which will begin shortly for both the parties there. For Zee, it's going to be a negative thing because the brokerage were expecting that the deal should go through after 2 years of hectic defending of the deal, in various courts against the regulator, against various creditors of the promoters who wanted a pie of the money which was coming to the promoters. And now it seems that the deal is off. Many of the brokerages have come down with a downgrade, with CLSA coming at sell rating with 198 as a target. You have Citi coming out with another sell which is around 180, 190 rupees as a target there. Elara, Nuvama and others who have also come with the target. And there is a while that's a target they have mentioned, there is a potential the stock can further slip down to 130, 140. That's what one of the analysts had told us, saying that the potential, if because of the deteriorating financials or the industry dynamics where ad rates have not grown, Zee has seen his EBITDA falling in the last 2 years, profitability coming down, margins under pressure, and the future strategy is unknown, going all alone. that could be one of the issues which will be plaguing Zee's share price. Not only that, there are murmurs about institutional shareholders now raising voices against the management. There could be some kind of, shareholder activism that may come in, and that is something which will, be overhang on the Zee stock going forward.
Absolutely. Thanks so much, Sajid, for bringing us those details. The stock is already down about 19% in 2024 so far. Let's talk about ICICI Bank. This is likely to be one of the stocks of the day from the large cap space because its December quarter profit has jumped as much as 24%, and it's come in above 10,000 crore rupees for the first time ever. My colleague Vishwanath Nair wraps up the key numbers for us in this report.
ICICI Bank for the third quarter of the current financial year has reported a net profit of about 10,271 odd crore. This is about 23.5% higher than where the bank was last year. Of course, remember that this is also slightly higher than the 20% net profit growth that analysts had estimated earlier this week. As far as the net interest income or the core income of the bank grows, that's grown about 13.5%. However, what has actually helped the profit is the other income growth, which has risen about 21.5% for ICICI Bank. Provisions also have dropped significantly, about 1,000 odd crore worth of provision. Now, of course, this number includes about 627 crore worth of provisions that the bank made against its AIF investments after the Reserve Bank of India had changed its norms. The bank has also recorded some write-backs during the quarter, and that's why the provisioning number has fallen and currently stands at a little over 1,000 crore. Advances for the bank have risen about 19 odd percent, while deposits have risen about 18.7, close to 19% as well. The advances and deposits have been growing in tandem for ICICI Bank, unlike what the rest of the private banking ecosystem is seeing. As far as the loan deposit ratio is concerned for ICICI Bank, that number stands at about 86% according to the management. They are comfortable with that number. CASA ratio for the bank has, of course, dipped from about 40.8% in the second quarter to 39.4% in the third quarter. That indicates that the bank is facing a pinch on the low-cost funding assets that are available to the bank. On the term deposit front, however, ICICI Bank saw about a 31% rise, and that number stands at a little over 8 lakh crore. All in all, the numbers are looking fairly strong. They have beaten most analyst estimates. One small negative for ICICI Bank is the dip in the capital adequacy ratio, primarily because of a 70 basis points hit on capital adequacy because of the Reserve Bank of India changing its norms on unsecured lending.
All right, and sticking with large private sector banks, we've got Axis Bank that will report its third quarter numbers today, and this is the last of the pack, remember, so you'll have a holistic view of the sector just after this. The expectations are that there will be an improvement in net profit as well as net interest income. Mimantsa Verma has more in this report.
Axis Bank is set to announce its Q3 earnings results on Tuesday, where it is expected to report a nearly 5% increase in net profit on year-on-year basis. Now, YOY figures are not comparable for Axis Bank this quarter because the Axis Bank acquired Citigroup India's retail operations in March 2023. On a sequential basis, however, the net profit is likely to rise by 4.5%. Now, what Kotak Institutional Securities Equities is saying that the rise in net profit is likely due to a favorable loan mix towards higher yielding loan segments as seen in the recent quarters, especially after the bank acquired Citibank's consumer business. The net interest margin may decline by 10 basis points on a quarter-on-quarter basis due to higher cost of deposits. The net interest income is expected to remain stable sequentially and rise by 8.7% year-on-year. Overall, asset quality is likely to remain broadly stable, but there can be minor slippages on retail loan front. So provisions may be on the higher side on account of expenses related to the acquisition deal worth 12,325 crore rupees. This amount, however, will be spread across a few quarters. So the key focus for Kotak Institutional Equities this quarter will be the integration with Citibank and the progress on net interest margin. Now, what BNP Paribas is saying is that the net profit will be boosted because of the provisions and capital buffering and the robust deposit franchise that the bank has got after Citibank's acquisition is going to help bank to prop up its retail portfolio. The bank has also shown willingness to grow its rural and small banking business, which is likely to boost the loan growth. But on the bank's net interest margin, that is going to see the fastest impact compared to to its peers, because in case there is a rate cut by the RBI going ahead. Similarly, on the rate of return on earnings is going to be above 18%, partly due to the low credit costs. One interesting bit is that that Axis Bank's short-term borrowings is at 16% of NDTL as of FY23, which is significantly higher than its other private lenders. So the margins are vulnerable in case the RBI does not cut interest rates on account of changes in inflation or India's external account dynamics.
All right, so those are numbers to watch out for with regard to Axis Bank. We have to slip into a very quick break. There's more stock-specific news to give you after all of that, so do stay tuned. Welcome back. You're watching All You Need to Know. Let's talk about the key stocks that you have to watch out for in trade today. And Anushi is joining in with a list of 3. Morning, Anushi. What do you have for us?
Morning, Alex. So 3 stocks to focus. I'll start off with JSW Group first, wherein JSW has received an incentive package from the Odisha government to set up a EV manufacturing unit over there. So this unit would be in 3 of the regions over there with a combined investment of about 40,000 crore and is expected to create employment opportunities for over 11,000. Next on the list is Adani Ports and Adani Electricity. So S&P has affirmed its rating for both Adani Ports and Adani Electricity, which is a subsidiary of Adani Energy Solutions. So over here, the company, the credit agency has also revised the outlook from negative to stable, and has added that it sees about minimal downside risk in the company, citing limited regulatory investigations into Adani Group. Other than that, on the outlook part for both of the companies, for Adani Electricity, it has added that it expects a ratio of about operating cash flow to debt to improve about 10% in the next 2 years, whereas for Adani Ports, it expects a ratio of adjusted net debt to EBITDA of about 3 to 4 times over the next 2 years. And last on the pack is we should definitely keep a focus on the renewable stocks post government's rooftop solar push. So over here, the government has declared to launch Pradhan Mantri Surya Yojana, which is to install about 1 crore houses solar energy, and this would include focus on stocks like Tata Power, Waaree Renewables, Adani Green, SW Solar, and others. So these are the stocks.
Thanks so much, Anushi, for bringing us those details. Now, a lot of earnings have come in over the weekend and a lot to take into account, of course. And Varsha is joining in with a quick wrap of those numbers. Varsha, what can you tell us?
Good morning, Alex. So let's start with Oberoi Realty, where company's third profit fell by almost 50% and it missed analyst estimates. Now, this is due to mainly decline in revenue. Revenue fell 35%, and the firm also saw expenses decline of almost 17.8%. Then we have Cipla, where third quarter profit increased, which is in line with analyst estimates, and the profit rose almost 32% year on year. And One India business grew almost 12% year on year, backed by strong performance across branded prescription. Also, on the Actor Pharma acquisition in South Africa, CCI approval has been received, with integration expected to be completed in Q4 FY24. Business in other international market, including emerging market, fell 2%. Then we have Coforge, where revenue was up 2%, while EBIT was up 19%. Margins were 13% versus 11%. If you see the key highlights, it signed 3 deals during the quarter. Also, a total book order to be executed in next 12 months is $974 million. Then lastly, we have VST Industries, where revenue was up 6%, but if you see, the EBITDA was down almost 23% and net profit was down 32%.
Thanks so much for bringing us those details. And we've got a few more stocks to talk about. In fact, we've got Colgate India, Karur Vysya Bank, Zensar Tech and Spandana Spurti, all of which have also reported their third quarter numbers. Harsh is joining in to tell you more. Harsh, which of these stood out?
Well, in fact, most of these have stood out, which is why we've picked them, Alex. You look at Colgate, look at the kind of numbers they've posted in terms of margins. It's been a very strong performance overall. Revenue up just about 8%, but it's a tough environment. And in that, revenue up 8% is definitely a positive. Your margins, though, have gone up from that 28% mark to the 33.5% mark on a year-on-year basis. Almost a 560 basis point increase in terms of margins. EBITDA has gone up roughly 30% on that 8% base on revenue. So that's the positive, and net profit, therefore, is up roughly 36% year over year. So a big positive coming in there. In terms of, I'll take Karur Vysya next. Strong growth in terms of NII. Margins have gotten better in a very tough environment. 25 basis point increase in terms of the margins on a sequential basis. So a couple of positives coming through for Karur Vysya. Now, what most are projecting is, most analysts on the street are expecting the bank to take this and extrapolate this further. Focus is largely on margins rather than loan growth, is what the company commentary has come through. Zensar, a weak set. Revenue down 3%, EBIT down 9.5%. Margins, therefore, have contracted by over 100 basis points, and you're seeing a 7% contraction in terms of net profit as well. That one may be a bit of a concern. Spandana was a solid performance overall. You're seeing a 70+% growth both on the revenue as well as on the PAT front, and therefore that one will be in focus as well.
All right. Thanks so much, Harsh, for bringing us those details. Remember, just a short while from now, you're going to get the outcome of the Bank of Japan meeting, where they're likely to keep the policy rate unchanged. Remember, this is one of the only central banks in the world that has continued to keep its policy rate at where it is, and that negative interest rate regime has continued. 0.1%, minus 0.1% is where the policy rate stands at right now. And that brings us to the end of this particular edition of All You Need to Know. Do stay tuned. We're lined up with India Market Open just next. So do stay tuned. This is NDTV Profit.